Hey everyone, welcome back to Corporate Decoder. Today we're diving into ScanTech AI Systems Inc.'s latest proxy statement for their 2025 annual meeting. Get ready because this one has some roller coaster, inducing proposals that could really shake things up for shareholders. And if you dig these deep dives into company documents, make sure you are subscribed. We also have a fantastic Discord community linked in the description below where we break down these filings even further. So what is ScanTech AI Systems all about? They are developing security screening systems using computed tomography scanning technology, aiming to detect things like explosives and weapons. Think airport security, but potentially a lot more advanced. They went public through a business combination with Mars Acquisition Corp in January of 2025. Now this document is a proxy statement. Basically, it is the company telling shareholders what is on the agenda for the big annual meeting on the 21st of November 2025 and asking them to vote by mail or internet on these important issues. You'll notice a lot of proposals here, but let's narrow it down to the big ones that truly matter for investors and the future of the company. We have the election of a director, ratification of their accounting firm, some pretty significant amendments to their certificate of incorporation and equity incentive plan, and the approval of issuing more shares related to an equity line of credit. First up, they want to elect Roosevelt Council as a Class I director for a 3-year term. This is pretty standard stuff, ensuring the board has the right people to guide the company. Then they want to ratify their choice of Berkowitz Pollock Brandt Advisors plus CPAs, or BPB, as their independent auditors for 2025. This is also a normal part of corporate governance, making sure their books are being properly audited. Now things get interesting. Proposal number 3 is a big one, approving amendments to their core charter to allow for one or more reverse stock splits. They are talking about ratios from 1 for -2 all the way up to 1 for -100 in a single split, and in aggregate up to a 1 for -250 combination. Why such a drastic move? Well, it seems ScanTech AI Systems is in danger of being delisted from the Nasdaq. On the 10th of July 2025, they got a formal notice that their stock price dipped below the required minimum of $1 per S-share for 30 consecutive business days. They have until the 6th of January of the next year to get back above that dollar mark. A reverse stock split is a common strategy to artificially boost a stock's per share price. However, and this is crucial, there is no guarantee a reverse split will fix the underlying problem. The stock price is tied to the company's actual performance, not just the number of shares. If the business doesn't improve, the price may just keep falling even after a split. They acknowledge this risk, noting that the history of similar stock splits is varied and there is no assurance it will attract new investors or get them above that critical Nasdaq price. Next, we have proposal number 4. They want to amend their 2025 equity incentive plan to increase the number of shares available for grants by a whopping 6.8 million shares. This is a significant chunk, bringing the total potential shares available for issue under this plan up to over 10.8 million. This is a big deal for employees and executives, as it means more stock options and restricted stock units can be granted. They argue it is essential for attracting and retaining talent based on their outstanding shares. This represents about a 15% dilution on a fully diluted basis, which, while not extreme, is definitely something for shareholders to monitor. Following that, proposal number 5 is another amendment to the 2025 plan, this time to add an evergreen provision. This means that each year for the next 10 years, the number of shares available will automatically increase by 3% of the total outstanding shares. This is a way to ensure a consistent pool of shares for future compensation without needing annual shareholder approval. It's basically a self-replenishing stock option pool. The board can choose to opt out or reduce the increase each year, giving them some flexibility, but the default is automatic growth. Then we hit proposal number 6, which is about approving the issuance of shares under an equity line of credit established via a purchase agreement with Arc Group International Limited on the 8th of October 2025. Again, the company is trying to raise capital. This agreement allows them to sell shares to Arc Group for up to $50 million. Normally, issuing more than 20% of outstanding shares without shareholder approval would violate Nasdaq rules or trigger a change of control scenario that requires a vote. Hence, this proposal. The real kicker here is the potential dilution if they sell all $50 million worth of shares to Arc Group, and assuming the shares are sold at a price of around $0.45 per S-share based on their trading price at the time, Arkansas C Group could end up owning nearly 62% of the company. That is a massive chunk meaning existing shareholders' ownership and voting power would be significantly reduced. If shareholders vote no, the company can only issue shares up to about 19.99% of what they had before, possibly forcing them to find less favorable financing or delaying their business plans. Looking at the ownership table, Seaport Global Asset Management LLC holds a substantial stake, over 16 million shares, which is over 22% of the company. This is a major shareholder, and their vote will definitely matter. Arc Group International Limited, the potential investor from the equity line, is also listed with over 5 million shares. So, what is the story here? ScanTech AI Systems is in a bit of a bind. They need cash to operate and grow, evidenced by the aggressive move to secure an equity line of credit and the need for a reverse stock split to stay listed on Nasdaq. The reverse stock split proposal is a clear sign they are struggling to maintain a healthy stock price, which is a red flag about market confidence. The simultaneous proposals to boost their equity incentive plan shares are all about trying to retain talent during what might be a turbulent period. They are betting big on their technology, but the financials or lack thereof prominently displayed here for recent periods suggest a company burning cash and needing capital infusions constantly. The sheer volume of shares they propose to issue under the equity line of credit also points to a significant need for funding, potentially diluting existing shareholders to a very large extent depending on how much they actually draw down. The strategy seems to be keeping the lights on and attracting talent while hoping their core technology catches on and turns everything around. But it is a risky game. On governance, they've got independent directors on the board, which is good. The audit committee is functioning and looking at financial risks. However, the sudden resignation of their previous auditor, Uhay LLP, in September 2025, citing issues with their quarterly report, is a definite concern. They then quickly appointed BPB. While it's good they have a new auditor, the circumstances around the change warrant attention. In conclusion, ScanTech AI Systems is at a critical juncture. The proposals to authorize a reverse stock split and a massive equity line of credit signal a company under pressure, needing capital and facing Nasdaq listing challenges. While the goal of advancing security screening technology is compelling, the immediate financial health and the significant dilution risk for shareholders associated with Proposal 6 are major points of concern. They are essentially betting heavily on future growth to justify present needs. What do you all think about these proposals and ScanTech's path forward? Let me know your opinions in the comments below. If you found this breakdown helpful, smash that like button, it really helps the channel out, and subscribe for more corporate deep dives. And remember to join our Discord community, linked in the description, for more discussions. Thanks for watching, and I'll see you in the next one.